So welcome again. Today let's go through the information that is circulating, the sale of Safaricom shares by government to Vodacom, the facts that are there, its impact on the market, and how you should react as an investor. My name is Peter Chege. That's my WhatsApp number, just in case you want to reach out to me. So before the sale, the way Safaricom is owned is that government owns 35%. Then Vodacom is part of a strategic shareholder, they own 40%. Then you as a public who have shares in Safaricom, that is retail and institutions, you own 25%. So the shares that trade at NSE are 25%. The rest don't trade. Again, government 35%. Strategic shareholders, that is Vodafone and Vodacom, we own 40%. Then the public, that is the shares that publicly trade, that is the retail and institutions, the ones you see trading in the market is 25%. So now the government have proposed they are selling 15%. Which 15% are selling? Remember, the government owns 35%. So if they sell the 15%, they'll be left with 20%. They are selling to Vodacom. So Vodacom now will increase their shareholding from 40 to 55 because they are buying 15%. Now remember, Vodacom owns 70% of Vodafone. So now in this new structure, they are buying whole ownership of Vodafone. So they will own 100%, meaning the 55% ownership now goes to Vodacom. So it will be adjusted. So government shareholding goes down by 50 from 35 to 20. Vodacom goes up from 40 to 55. Your shareholding as a shareholder of Safaricom who bought during IPO or who have been buying in the market remains unchanged, 25%. So the key point here is public investors are not losing anything. There is that information that is circulating which is wrong. You are not losing anything. Retail, that is institutions and retail, they are not losing. They remain unaffected. The 25% shareholding. Yeah. So what about the pricing and which shares? So we have said government is selling to Vodacom. They are selling at 34 Kenya shillings per share. This is premium above the market. Market currently is at around 28.50 to around 30. So I've been playing around that price. So the shares involved here are not the public or retail shares. It is the government. So government is selling at one share at a Kenya shilling 34 to Vodacom. So Vodacom will increase their shareholding. Public shares don't change. Whatever trade is NSE doesn't change. So currently the share of NSE is trading at around 29.50. That is retails and public shares that are still trading. Whatever you buy and sell at NSE. So after the announcement, and when they said they are selling it at 34 Kenya shillings, the market was expected to overreact. That is, prices to move up from 29 to over 30. So they have said they are selling at 34. So the expectation was the shares will go up. But to the shock of many, the share actually went down. If you look at NSE, we came from a bull run. Now we are in phase where market is a bit stable. We might experience a bear run if things go the way they are going, especially this holiday. Hopefully it doesn't extend to next year. So at this stage, we don't expect the prices to move. But with this announcement, we had expected, and many people expected, the price would shoot up. Unfortunately, there are other factors that affected the market. So why prices are still low despite the announcement? One, benchmark against market reality. The sale price of 34 sets a difference, but doesn't guarantee a floor for market trading. So the price that was floated by government, remember it's not the shares that are listed at NSE. These are government-owned shares being transferred to an entity that still owns Safaricom. So what does that mean? That price is independent of market price. And also, market price is independent of this price. Secondly, investor activities. Retails right now, they are selling. We are in holidays and school fees. So people are selling shares to pay school fees next year and also meet holiday expenses. The same time, there is Safaricom board is closing tomorrow, medium note. So most of retail investors, since Safaricom is not offering any dividend and they are likely the prices will go down in January, they are selling now at high price by the board, which guarantees them 10.4% interest tax-free. So that is the reality. People are selling to buy bonds. Foreign investors are also selling with possibility of relocating that money to bonds or other assets. So it has nothing to do with foreigners exiting. They are not existing. They are also, but the net position was a sell position. Meaning, suppressed demand. There was no much demand compared to supply. Then, dividend rights impact. I think government will be refunded dividend by Vodacom, some billions. What does that mean? Remember, the dividend will be paid to the strategic shareholder. If it is government who owns those shares, by the time they are completing transaction, it's government which will be paid. But remember, this is a transaction that have to go through approvals and also parliament. What that means, there could be already politicians, Kennedy Dinyoro, they have already raised their voice. We expect for civil society to the court that will delay the process. What does that mean? Dividend will still go to Vodacom. But remember, in the agreement, Vodacom will be the full shareholder. In that agreement, they agreed to refund the government their dividend in advance. So they will be paying that dividend in advance to the government. So that may have triggered, and it was expected that most of us would interpret that it's a special dividend that will be given. There is no dividend that's being given to shareholders, the ordinary shareholders, the retail. So that would have pushed the prices up. So the confusion and adjustment can reduce immediate buying interest. Then liquidity and market timing. Already I've said about the holiday, and we are in quiet trading period. There is no dividends which are being announced or corporate actions. So there is reduced trading activity, meaning what? Supply is suppressing demand because people are trying to sell off to get money for the holidays. So that means prices moving down. So this liquidity prevents the market price from immediately reflecting the sale premium. So what the news says versus the reality. For those who have watched NTV and also KTN, you had the headlines. They claim it's all shares being sold. It's not all shares. There is politicians, Dinyoro, mentioning 15% of public shares. It's not public shares. Let me clarify this. First of all, it's not all shares. Government owns 35% of Safaricom. They're only selling 15, they retain 20. So it's not all shares. Secondly, it's government ownership. They don't touch the 25% that is owned by public. So it's not public shares. So reality check, public retail investors, their 25 shareholding in Safaricom untouched, still trading in NSE, and you continue trading forever. Government retains 20% after sale, which means governments still have say. Remember, in these we have seen that announcement. They are conditions that government still controls the board. They still retain the seat. You as the public, you also have your representative, Vodacom they have. But remember, Vodacom is increasing their shareholding. The sale involves only strategic shares being transferred from government to Vodacom. After Vodacom fully owns Vodafone, 100%. So why these wrong information spreads? One, social media. You have seen even Uchumi people spreading wrong information for you to buy. So misleading headlines which aim to create panic. Look at you look even other social media. I've just picked up. They will create a hype with just a title, clickbait, so that you read. They are reaping money out of that. So these allows politicians and insiders to buy at low prices for future growth. Why? You will push prices down if you panic. Now with what Dividend have said, what media is saying, you will push prices down. That is the time they buy, and they buy quietly. You never see 1 million shares trading at NSE in your view, even on online portal that you can only see on NSE platform. These transactions, they use disclosed quantity. Behind that disclosed quantity, they have put 1,000. 1 million is what is selling. You will never see it on your price. You see the 1,000, but behind it, a lot of shares are transacted. I would like to remind you about KPLC. I always talk about it. What did Dinyoro do? Your guess is as good as mine. You accumulate shares when low, then after you leave government, everything now normalizes. Even prices go up, mainly government, answer. Don't quote me that. Then this may trigger even unnecessary civil and legal distractions that slows the process. Remember, this should not affect shares trading at NSE. And I think government was strategic to announce this when the board is closing. When you are concentrating on the board, you need to concentrate on this. That will not affect the market. Thumbs up to the government for that. Otherwise, people would have lost money. So the lesson, headlines don't equal market. Yeah, I always say whatever you hear on social media, just create it and treat it as noise. And always call out those noise makers because you will lose money because of that noise. Everybody now is analyst and a trainer at NSE. You need to be very careful, get information from the market. Those people who have experience in the market. So how you should be reacting? First of all, avoid reacting to social media. You will lose money. We have seen people lose money. And you can't blame anyone. Remember, social media is not regulated by CMA. Whatever they say, it doesn't stand any test of regulations. Observe real market moves, order book, and liquidity. I always say this. Go to your online platform, check market depth, see what it gives you. Between 9 and 9:30, that's when it's pre-open. That's when people are submitting orders. Don't try to base market on that. When market opens between 9:30 and 10 to 11, that is market noise. We call it market noise. Because that's when even market orders are coming in. Market orders have one downside. They come and clear everything, creating artificial volatility. When market orders are cleared and orders from the previous day, I've done this full video. When they are cleared, that's when market normalizes. That's when you can judge the market. And that's when you see real liquidity. Then also focus on long-term strategy. I said, forget about short-term. Short-term, you lose money. Those people who are telling you buy Uchumi at 1, it will go to 2. Already you can't buy. There is no supply. So who will you sell to when it reaches at 2 bob? You will push even to 10, but who will you sell? Always ask yourself that question. Otherwise, that share, the next thing you might see is suspension. It has been suspended before. So those people who are telling you they are bought, they should also be telling you this share was suspended. So focus on long term dividend, strong companies that give you returns. As we run through these videos, you run how you can make money. Then portfolio takeaway. Your public shares are safe. Any temporary dip can be an opportunity if based on market real fundamentals, not rumors. So takeaway, retail public retains all the shares and rights. Nothing is moving. Their voting rights still remain. Strategic share sale, just Vodacom becoming majority shareholder. Then ideally, because they are surpassing the 50%, it's supposed to be a takeover. That is Vodacom to fully own Safaricom, but they are applying for that exemption. They don't want to buy you out. So price dips is just market dynamics, not loss of public money, as said. Then panic-based decisions, those are losses. Informed decisions, growth to your portfolio. Avoid misleading news line and headlines. They are always common and always use verified disclosures and market data. So let's meet in the next one. Thank you.